It's the 10th of February 2021, and I'm here today with Charlie Morris, who is founder of ByteTree.com and fund manager and specialist in digital assets, who's going to enlighten us on Bitcoin and investing in digital assets. Charlie, thanks very much indeed for joining us. So tell us a bit about your background.
Well, pleasure to be here, Tamzin. My background is that I'm far too old. I'm over 50 now. Which happened during lockdown. But of those years, 21 or 22 are spent in the asset management industry, about 17 at HSBC Asset Management, where I was the head of absolute return. And after I finished there, I sort of spotted Bitcoin. I'd always been a big friend of the gold market, recognized the potential of this digital upstart, and built a business around it. So, by trade, I'm a fund manager.
So as we speak here today, there's been a massive surge in the value of Bitcoin. Elon Musk bought in £1.5 billion earlier this week. And I think that the valuation is now $47,000 for one Bitcoin, or £34,000 or thereabouts. What's going on? What's the valuation down to?
Well, over in recent weeks, you can really put it down to two people, Elon Musk and also Michael Saylor. Michael Saylor, since the sort of summer of 2020, has been really rounding the troops and explaining to the world that Bitcoin is a digital monetary asset. And over the long term, it's going to protect against inflation. And as it starts to mimic the concept of electronic gold, the price will appreciate significantly. Now, I think we should probably break that down into pieces and talk about those a bit more slowly. But the bottom line is huge amounts of inflows have been attracted to the Bitcoin network over the last 6 months, and the price has responded accordingly.
Who is Michael Saylor?
So Michael Saylor is the chief executive of a company called MicroStrategy. It was a small software company, small by big software company standards, and it was worth about $1 billion with about $500 million on its balance sheet 6 months ago. And he decided to put that $500 million into Bitcoin. Then he went and launched a bond and borrowed another $500 or $600 million. I forget exactly how much from the bond market, and it was actually a convertible bond, and he invested that in Bitcoin as well. So he's got a small software company, presumably worth about $500 million, and now he's got a Bitcoin that cost him a little over $1 billion, which is now probably trebled. So that the MicroStrategy is now the lion's share of the business. Is no longer the software company, but a holding in Bitcoin. He got the world's attention, and he's been encouraging other chief executive officers around the world to put their spare cash, their treasury as they call it, into Bitcoin.
So how do we as sensible investors know whether we should be putting our money in Bitcoin? To me, it's just a completely unknown area, and I don't know how to value it. I don't know how to make a sensible rationale for buying in and what I should expect.
Well, it's a very good question. It's a question I asked myself in 2013, which is why I set up ByteTree.com. I was a multi-asset fund manager, so I was investing in gold for many years and many different sort of hard-to-value assets and different investment strategies and so forth. And when I came across Bitcoin, I wanted to come up with a framework of what it was all about. How many Bitcoins were there? What use they would play in the future, and try and answer some of these very, very good questions that you pose. And I think that the simplest point is that you kind of know that if Bitcoin turns out to be successful, you know where it's going. So it's not that difficult to come up with a scenario for $1 million Bitcoin, but it's very hard to come up with that scenario in 2021. You can easily come up with it in 2040 or 2044. If there's lots of inflation, it might happen earlier. But the way the Bitcoin is supplied to the market by the mining community means that they must be paid. So at $50,000 Bitcoin, which is not far off where we are, the network requires inflows every year of $18 billion. Now, I don't think many people in the market currently realize that. So $18 billion to put into perspective, gold last year attracted $40 billion, which was its best year since 2000, in the period 2008 to last year. But it had an average inflow of $8 billion. So, asking Bitcoin to attract $18 billion every year is possible, but it's a tall order, and that's just for 50,000. But because of the way the mining network works, there are fewer and fewer Bitcoins coming to market in the future. And so therefore the miners require less money to be paid to them. And so the result is it's very easy to get to very high prices in 10, 20, 30 years time, much harder today.
And what is the average inflows that you would think is realistic to forecast per annum over the next 5 years?
That's a really good question, Tamzin. You really got me there. But I would think that the range of $10 to $40 billion is achievable for an asset class that is, if the world thinks they need it. So if you imagine all the portfolio managers in the world start allocating to Bitcoin like they did gold from 2004 to the present day, and put 1 or 2% in, then you're easily in that vicinity. But as I say, every 4 years, those numbers, the numbers required to send the Bitcoin price higher fall rapidly, and so it's much easier to have a higher Bitcoin price to sustain, not necessarily push it to a higher price, but to sustain a higher price after 2024, after 2028, after 2032, etc. It all gets much easier in the future. But I think that right here, right now, $50,000 does seem like a tough job. When in the UK, basically Bitcoin products, financial products, are banned by the Financial Conduct Authority. So that's one country out of the loop. They're not selling any in most countries in Asia and India and places like that. So you really are dependent on countries within the EU and the USA and bits here and there around the world to create those flows. And I think that's really why Michael Saylor is persuading corporate treasuries to do it, knowing that investment products are limited. I mean, even in the United States, there's Grayscale. The ticker is GBTC, which isn't an exchange-traded fund. It's a slightly odd vehicle that's managed to slip through the net. But it's actually quite hard to access as a professional fund manager, Bitcoin, in a compliant manner. And so I think that this is why Saylor's chasing corporate treasury and saying to people that the dollar's not going to be worth very much in the future, which I think most of us would probably agree because of what's happening with monetary policy and so forth. But the question is, how much flow into the network can they achieve? And I don't think it's very interesting that Tesla bought 1.5 billion. I'd be much more interested for them to pledge 1.5 billion per year. That would get me much more excited than the one-off.
And as I understand it, back in, say, 2013, it was largely retail investors piling in, or private investors, and now it's far more institutional. Is that correct? And are institutions still buying at this level?
In Q4 2020, so last quarter, there was a lot of institutional flow. I mean, the most was ever seen. And this year it has dried up a bit. I think that, I put my HSBC hat on where I worked for 17 years looking at assets like this. I mean, it wasn't around for most of the time I was working. But, if I was there today, I would be looking at something like this and asking questions. And one of the attractions would be, when the Bitcoin price is stable and it's sort of low and volatility is low and all of those sort of nice things would encourage me to invest. When volatility is very, very high and the price has gone bananas and the noise from all the bulls is excruciating, that would put me off. And so I'm not surprised, given the way the market's gone, that we've seen lower investment fund flows, but we are seeing some corporate treasury come through. And I think that, when it comes to corporate treasury, will Procter and Gamble or Exxon buy Bitcoin? I just don't see it. But I can see how many of the tech companies in Silicon Valley would.
So if you are buying Bitcoin, what price now would you be happy to buy Bitcoin?
Well, I mean, we manage Bitcoin investment products, and so we do our job. Investor wants exposure to Bitcoin, we give them exposure to Bitcoin. And long term, I'm extremely bullish. I think there'll be much higher prices in 10 years from now than today. But I have to say, right now, I do feel slightly uncomfortable that the price of Bitcoin is being driven by Twitter. That is not how I do financial analysis. I've come here to have a grown-up conversation about what I hope to be a grown-up asset, and right now, it is a little crazy. But I think that 20,000 Bitcoin is easily sustainable. I mean, that's a properly robust level. Even 30,000 starting to look more attractive. But I think that to chase it at these levels, without understanding the implications that you need $18 billion a year for the next 3 years, you need to be on your guard. I mean, they might massively exceed that. You might get a tsunami and everyone buys it, and then up it goes. But this is what is the driver. It is, understanding inflows versus outflows is key at this point. Before this point, we basically had equilibrium for 2 years. Sort of average price of around 10,000 that lasted for quite a long time, and the market was very settled and balanced at that point. But that was talking about 4 or 5 billion of flows every year, and the market achieved it. So, I think it's easy to suggest that the Bitcoin's bigger and bolder, that it can do 10. But that is a price of 25, 30,000, between $20 and $30,000 Bitcoin. I think is very sustainable. But I would reiterate, in 2013, in 2017, we've seen the price shoot up way ahead of events, and it looks like it wants to do that again now. And I'm not talking about that. I'm talking about an average price over the next 3 years, which is a very different kettle of fish.
So part of our models should include inflows and outflows and have an understanding of that. Talk me through the costs of producing and how that affects the value as well.
Well, this is what I'm talking about, because the assumption is that the outflows are basically paying the miners, and Bitcoin has a quote unquote inflation rate of 2.5%, somewhere between 2.5 to 2.5, which supposedly tends towards zero over the next 100 years. It doesn't quite, because you always have to pay miner fees. So my estimation, it's more like 0.7% is where the long-term inflation rate. So Bitcoin and gold on the supply side are very similar with a long-term view. And that means that the difference between them surely is demand, and the demand factors for the two assets are very, very different indeed. And something like gold, hangs itself on real interest rates. It basically behaves like a 20-year US tip, a treasury inflation protected security, or inflation linked gilt, if you like. It behaves a bit like that. Bitcoin really is much more about the network effect. There's no evidence that it has strong macro credentials at this time. I mean, it does move inversely to the dollar. It does prefer inflation rising to be falling. I mean, 95% of Bitcoin's appreciation over the last decade has coincided with rising or stable inflation, and it's tend to have gone down when that's been the opposite. So there are clues, but there's no sort of robust macro framework that we can come up with at this time. But the miner bit, I mean, we know exactly what the miners are going to sell going into the future, because if you're running big computers in Sichuan province, which are costing you a fortune in electricity, the reason you're doing that is to sell the Bitcoins at a profit that you've above and beyond the electricity you've consumed. And in the same way, if you were an oil driller or a copper miner, you don't speculate on the copper price or the oil price. You just get your oil or your copper and you get rid of it. That's what Bitcoin miners do, and so that's why they do act as a brake on the acceleration of the price. Obviously, they can stand back for short periods of time and enjoy the price rise, but obviously they'll always come back to market, and there'll be plenty of supply.
And we're talking just about Bitcoin. Are Bitcoin the cryptocurrency that's stealing the march, or are there others that are equally, or if not more important?
Well, it's the only one that's really got institutional credibility. By that I mean, it's been around for a long time. It's got the most liquidity. It's easy to trade in large size. And you've got the best service providers. So you've got the best vaulting services and custodians. I mean, you can custody Bitcoin with fidelity. We're not talking about some online widget. This is fidelity. And so it really is the grown-up in the room. Ethereum's a catch-up play. The problem with Ethereum, in my opinion, is the fees are so high to transact that it puts people off. Ultimately, it's seen as a utility platform. You can do lots of things with Ethereum, like launch your own tokens that can represent all sorts of different things, which is very exciting stuff. But there's such high demand for the Ethereum network that the fees are really, really punitive, and that's a problem. It's not proving to be as scalable as it needs to be to fulfill its mandate. Now, after Ethereum, you drop down into small beer territory, and yes, I'm sure there's a few winners and losers out there, but good luck. It's needle in a haystack stuff. It's very much like finding a great small cap stock that is little known. So it's tough. It's tough research there. It's not really what we get into. There are thousands of these coins in various guises out there, and it's a tough job to pick them. But I think that you've really got to assume that Bitcoin has the network effect, and it's the largest today and will always be the largest. Now, I say that having had the view in 2013 that Bitcoin would be superseded by a better design. But it's quite clear that once you've got the world's attention, it's very, very hard for someone else to replace you. Think of Google and Facebook and these things. No doubt there are millions of competitors out there that are doing similar jobs, in some cases possibly better. But they've got people's attention, so that's why people use it.
And isn't transactions per second a limiting factor for Bitcoin? I thought that they were slower than others, and the number of transactions they could do per second were a fraction of, say, what Visa can do.
Yes, that's absolutely correct. But the problem there is, I think that the people who from outsiders who look at Bitcoin, they kind of think it's this electronic bar of gold that you've got to shift around, and oh great, it's the internet, so therefore we can do as many transactions as we like. Now, in the case of Visa, you can, because they just got a record keeping exercise where Visa, say that money's gone there. In the case of Bitcoin, each one is done independently, and a lot of hard work goes into proving that transaction is a real thing. Now, the scalability of Bitcoin really has little to do with that low transaction, because you can never really have many more than 3 million transactions a week on Bitcoin, because you start to get the fee bottleneck, which is what I talked about with Ethereum a moment ago. But what you can do is you can have applications on top, whereby you can have pretty much free, unlimited transactions in a very similar style to how Visa, MasterCard do it. So I think that's where it's going. So the difference between gold and Bitcoin now is not just so they're both monetary assets long term, but Bitcoin does have utility, and this is when the bull in me will come out. So we've done the caution on the flows, but now the long term, I'm very excited long term about Bitcoin. There's no mistake about that. What it's done, the other point about the network effect, what it's done is all the clever people, the young 18-year-olds who understand how to code, have been drawn to the Bitcoin network in the way they haven't been to the other opportunities in the crypto space. So there are lots of things happening in the crypto space, but the vast majority of that effort is around Bitcoin. And it's a bit like when you put a car factory in Sunderland and all the suppliers rock up and build factories nearby. It's that sort of network effect that takes hold and becomes long lasting. And one of the simple ideas is that you can use Bitcoin. Don't think of it so much as the wobbly price and the expensive fee to trade and all that, but you can lodge Bitcoin, like a large amount of money, say $1 million as opposed to $100, in some sort of electronic vault. Let's just call it a vault, and then you can use that as a collateral. And then once you're in, you would then have an access to a payment system, a bit like Visa or MasterCard, where you could send not just Bitcoins around the world, but anything around the world, yen, dollars, whatever, pretty much for free. And this is when it becomes really, really interesting. And this is why the world actually needs the Bitcoin network. And that's actually why the miners are worth the money they're paid. I'm just suggesting at the moment they're being paid too much given where we are in the cycle.
So do you see it replacing fiat currency?
No. Fiat currency is issued by the government and has zero volatility in your own country for buying goods and services. So what I mean by that is the pound will never have volatility in Britain. It might have volatility when you measure it in terms of the French franc, but it will never have volatility in Britain. It will lose its purchasing power over time. That's a different thing. It will do it very, very, very gently, so you won't notice over a 2 or 3 week period, or even a 1 year period. But you will lose purchasing power. That's the design of fiat currencies. It's not a bad thing. It's not a secret. It's the design of how the system works. And so that's why we invest money, because holding cash is ridiculous, particularly when the interest rate is non-existent and you have an inflation rate that's creeping materially higher than that. So that's why we invest at all. But fiat is required, and it's actually a really well-designed system. It's just been abused by governments because you can have hard money if you want to. You just have to have interest rates higher than inflation. There's been plenty of times in the past when Britain, America, and Europe and so forth have had that. We just choose not to do it today because they want to grease the wheels of the economy post 2008. And so you have a fiat system which works for day-to-day business, but it's a terrible investment, and we mustn't confuse the two. What the central banks will do over time is launch digital fiat currencies. So it's exactly the same pound and dollar. It's going down long term in terms of purchasing power, but it will sit on wonderful modern payment rails. So it'll be able to send, £100 to Australia in a heartbeat without a bank. And that's very powerful. I mean, I there's an example. Just the other day, I paid a software engineer in Amsterdam a small bill, €600, and it cost me 25 euros. It took 3 days. I mean, it's ridiculous. And if you go to Paris and have a nice lunch, imagine lockdown ends one day, then we're actually allowed to go back to Paris and have lunch. My little joke is that a banker in London puts a pudding on your bill without you really realizing it when you use the Visa or MasterCard network. So the financial services industry is ripe for disruption. And the beauty of this whole crypto space is it does it independently. It does it without a financial intermediary. So it really is freedom in that sense, financial freedom, and that is a very exciting concept. So that's the long-term bull in me coming out, and what really attracted me to this space. But when I do the hard numbers here and now, I recognize that Bitcoin is going to struggle to average $50,000 for the next 4 years unless it can get a lot of inflow. But of course, after that, it becomes a lot easier, and then it's very easy for the price to start accelerating again.
So there's no real regulation in this space at the moment. Is that a risk?
Regulation's a funny thing. It's a double-edged sword. I mean, I'm all for regulation, and I wish the regulators would be a bit more constructive in certain countries. I mean, some countries, they really don't like it. Some countries, they're quite friendly to it, like Switzerland. And in America, it's different. You've got the state of Wyoming, who are attracting Bitcoin companies. And they're all setting up there. So, there's going to be a divide on this. Now, the Bitcoin itself is never regulated, can't be, impossible, because you can't set the rules. It's a bit like, telling the birds how many worms to eat. They're not going to listen to a regulator. It's out there, it's happening. But what the regulators do is manage the nodes or the meeting points between the Bitcoin network and traditional finance. So, for example, you've got a bank account and you're trying to send money to and from some sort of crypto entity. That's been made difficult. It's not about to be made difficult. It's been made difficult for several years now. And so the amazing achievement of Bitcoin is that it's grown to what it has, despite those massive headwinds from those sorts of from those obstacles, basically.
But one might argue that was necessary, because I heard a figure somewhere that a lot of criminal activity, when Bitcoin first started, 40% of transactions were criminal activity. So that is something that potentially needs regulating?
Potentially, but I think quite a lot of pounds and dollars and euros are also used by criminals. So I think it's a bit of a misnomer, that argument. I mean, the thing about Bitcoin is it's not secret. I mean, my company tracks Bitcoin. We know what happens to it as it moves around the world. That's what we've been doing for 7 years, building. And there are other people who do it, for the FBI and for the regulators. And so if you want to play illegal games, then please don't use Bitcoin. I suggest you use old-fashioned money. It's a lot safer for your activities. But the bottom line is that, I think that the criminals validated Bitcoin in the first couple of years. And so all the naughty things, the bad things in the world, they were the first to get it. Just like with the internet. I mean, in the 1990s, there was nothing polite on the internet. It was all bad stuff, 100%. And there's still quite a lot of bad stuff on the internet, but the vast majority of it now is productive and useful and on side with a polite society. So, and recent evidence suggests that it's really less than 3%. Plenty of papers have been written on this. I think the people who are saying that Bitcoin's a criminal network really are hanging on to very old ideas and don't want to accept that their version of the truth is A, massively out of date, and B, false.
And ESG is a buzzword at the moment, and everyone investing is concerned about the ESG credentials. Bitcoin seems to use, I had a stat reported that it was about 0.6% of the world's electricity supply goes into Bitcoin production, which doesn't seem very sustainable. Is that not a risk to Bitcoin and its ongoing supremacy, or any digital currency?
I think you've understated 0.6. I think it's more like 3 or 4. No one really knows. But it used to be, they used to say a country the equivalent of Ireland, and now that's gone to a country the equivalent of the Netherlands. So it's a lot of electricity, however you measure it. Now, I'm not going to defend the ESG, but I will tell you what is happening. And that is that the Bitcoin miners have all moved to the place in the world, because then, all you need is a computer, or obviously a lot of computers, but they can fit in a container or whatever and be shipped to any place in the world they like. And they go to the place with the cheapest electricity on earth, because that's the economic thing to do. And the place where they have surplus cheap electricity tends to be in places where there's ample renewables, for example, next to hydro. So I think 2/3 is in China, the Sichuan province, which has got big hydro projects. You also hear about it happening in Iceland, where they get the cool air for the cooling as well. And so one never really knows, because the miners don't exactly broadcast their activities. But in any event, the Bitcoin network does buy cheapest possible electricity all over the world, and that tends to be near renewable resources.
So I want to buy some Bitcoin. How do I go about it?
Well, the easiest thing would be, if it's a small sum, something like the Revolut app on your phone. That's a legal, compliant way to do it, buying real Bitcoins. If it's a larger amount, you might want to open an account with Gemini or Coinbase. And the problem with, or Kraken, Kraken, the reason you might want to do those is because they're deemed to be compliant. But one hears at the moment, with the frenzy in Bitcoin, that it's very hard to open an account at the moment. So the Revolut app is probably a best bet for small amounts. But I think that if you're new to Bitcoin and you don't understand it, the thing to go and do is go and buy 50 quid's worth and have a play with it, and get your friend to do the same and send it around between you, understand the mechanism and read more, take your time, and make a decision. I really wouldn't pile in during an excitable moment like this, which is not financial advice, by the way. I'm just suggesting the risks are currently high, given the scale of the moves and the fact they've been driven not by the sort of long-term factors that I've been talking about, but by hype on Twitter.
And we've all heard stories of those hard drives that have gone missing or have been thrown out. How do you manage your Bitcoin once you've got it? How do you ensure that you can access it when you want to?
Well, it's basically you just need to remember some phrases, and I don't recommend people go down this route. I mean, I think if you're tech savvy and you're youthful and you're experimenting with small sums, fine. But don't do large sums in real Bitcoin with real wallets. Things can go horribly wrong. And as you mentioned, losing hard drives, forgetting phrases. There's no one to call. There's no help center. There's no customer services desk. So I would strongly advise that people go to some sort of credible third party. It's worth it. They won't charge you that much, but it's worth whatever they charge you.
And is there any estimates done of lost Bitcoin? People that are, all the money, all the Bitcoin that nobody's claimed because they lost the hard drive?
Yes. I mean, we can track exactly. At ByteTree, we track some numbers exactly. So I know to the Bitcoin how many have never been pushed into the network, which have been mined. And it's presumed that they all belong to Satoshi Nakamoto, the chap that invented or wrote the software. He, her, they, whatever it is. Satoshi Nakamoto. But anyway, somehow or another, they've got 1.5 million Bitcoins from 2009, which had never come to market. On top of that, you could reasonably estimate that 30 to 30% of all Bitcoins are probably lost. We know that because these Bitcoins haven't been seen for 5 years, and that's it's a long time for a Bitcoin not to do anything. Now, it could well be it's stored in a vault, and a bit like gold in a vault and getting covered in dust, and it will still be there, and someone will have the keys later in life. But there's a sort of assumption that if something hasn't sort of waved at you for 5 years, it's probably dead. So I sort of buy into that argument, but we don't know for sure how many bitcoins are lost. But I would think as an estimate, the number I sort of do is I say whenever someone says that the value of all the bitcoins in the world is worth $800 billion, I just shave a quarter off and think it's probably a bit more like that.
And are there any collective instruments that one can use to get exposure to Bitcoin without having to buy your own Bitcoin or get involved in something you're not quite comfortable in?
There are many, but officially UK investors are not allowed to buy these products. I believe if you're high net worth, you could ask your private bank to give you access. But I think if you're a retail investor, then you would struggle to do that. You can buy some of these companies in America, for example, MicroStrategy, that have Bitcoin on their balance sheet, but you're paying more money than the Bitcoins are worth. So they're trading because there's such hype that they're trading at a premium to the Bitcoin valuation. So that's not a very good way to do it. I just hope at some point that the UK regulations become a bit more Bitcoin friendly, and then that will change. But right now, I think the answer is there are no products that you can buy Bitcoin as a UK citizen at net asset value, as in without paying more than the Bitcoin price itself.
So we've all got a finite amount of money to invest. How do you see the allocation between, say, Bitcoin, gold, equities, and other asset classes?
Yeah, well, that's a complex question. It depends on who you are and what your view of the world is. But I would think, if you don't mind, I'll leave the sort of sensible part out, which is equities and bonds, which is what you should speak to your financial advisor and all that. And let's take the exciting bit, the sort of inflation-proof bit of Bitcoin and gold and how they interact with each other. Gold's established over many, many years. Bitcoin's an upstart. When the gold miner mines gold, you buy the gold off him. He never comes to you again saying, pay me every year. Bitcoin does, because it requires electricity and miners to process the network. Gold is beautiful and Bitcoin is virtual. Bitcoin has utility. There's promises of building a new financial system on top of the Bitcoin network, not necessarily using the network itself. Gold's utility really doesn't go much beyond jewelry. I mean, that's very useful, and I think wedding rings and so on are an important part of our culture. But it's there to look good and to wear well for historic reasons. So there's many differences between them, but they're both deemed to be long-term hard assets in the sense that they will provide inflation protection over the long term. Not over the next 2 years when the price could go down or could go up, but over the long term, there's the expectation is they'll be hard assets in that sense. And so to allocate between Bitcoin and gold is a really good idea. And I would say that a risk-averse investor who likes both, by the way, I'm assuming you like gold and Bitcoin here, but asking themselves the question, how would I diversify between them? A conservative investor might like to be about 80% in gold and about 20% in Bitcoin. And a bit more of an adventurous investor might like to hike that up to sort of 30 or 40% Bitcoin and 60 or 70 in gold. But I don't think you want to go higher than that. I think to be all in Bitcoin and have no gold is wrong, and equally to have all gold and no Bitcoin probably isn't the right answer either. So to find that balance, which if you forget all the numbers I've thrown at you, 1/4, 3/4 in favor of the calm one.
Charlie, thank you very much indeed for such a comprehensive overview. Tell people where they can find you.
ByteTree.com. So we have a website. It's got lots of facts and figures. I write a commentary every Wednesday. In fact, it will be going out shortly for this week. And I do that every week, and it will teach you about Bitcoin. And there's lots of numbers and charts and flashing buttons to play with. And so please visit us at ByteTree.com.
Many thanks. And many thanks to all our listeners. If you want to find more educational interviews like this, go to piworld.co.uk. Many thanks for listening and stay well.